everyone to Hong Kong Blockchain Week. I am Vovchok, Event and Investor Relations Manager at Startup.Network and Ambassador at Blockchain Association of Ukraine. Really excited to be here and welcome our amazing panelists. So please give it up to Nathan Doctor, who is the founding partner of Infinite Capital. It's a crypto asset investment firm. As a firm, they invest thematically across DeFi and crypto networks. Having invested early in many top 50 cryptocurrencies and top 10 DeFi projects, the firm actively operates in the protocols they invest in. Nathan has been investing in crypto since Bitcoin in 2013, developing an ability to anticipate crypto native use cases. He's also the co-founder of Qualified.io. It's a platform for assessing software engineering skills used by clients including Apple, Facebook, and Zoom. The company also built the free coding skill community called codewars.com. Nathan is a fellow at the Edmund Hillary Fellowship and has spoken at the range of events from TEDx to Davos. So Nathan, welcome.
Thank you. Glad to be here, Maria.
Thank you. Glad to see you today here. And also, I'm really happy to see today here Jonathan T., Head of Trading at Copper Hong Kong. Jonathan has more than a decade of experience in trading and financial markets. Prior to joining Copper, he was the head of trading in CoinSuper. Before, he was an equity derivatives trader at JP Morgan. He obtained a bachelor of actuarial studies from Macquarie University in Australia. Welcome, Jonathan.
Thank you, Maria. Glad to be here.
How is your mood?
Very good. Yourself?
Yeah, me too as well. Today, actually, we have a pretty exciting topic, which is like one of the major trends this year, the rise of DeFi, which actually become a hype, but we are going to discuss from the hype to the real use cases. So actually, if we look at the data this year in the third quarter, specifically of 2020, DeFi has been defined by the largest bull run since ICO boom in late 2017 and early 2018. And the total value actually locked in DeFi sector hits record. I checked today in the morning, it was $13.8 billion. It's almost $14 billion. So can you please explain and share with us this increased demand for DeFi? What are the main reasons for that? And what might be the consequences?
Yeah, it's a great question. There's a lot happening in the DeFi world. It's been forming over the last year, I'd say, and really 2020 it started to take. But I'd say the number one use case here is that for the first time, we're now seeing on-chain all of these ways to unlock value from the cryptocurrency people hold. So Ether, Bitcoin on Ether, whether it be WBTC, RMBTC, et cetera, there's now all sorts of ways to actually get yield from these. So whether it be from loaning, trading it, applying as liquidity providers, yield farming within all of the range of projects that are out there. And so there's a whole new opportunity set for profit making.
Jonathan, in your opinion?
Yeah, absolutely. I mean, I guess the main features of, DeFi definitely play a major role, of the increasing demand. So particularly the actual, permissionless features where a lot of platform actually designed not to, dependent on KYC. So basically anybody with internet access will be able to access the DeFi service. And another obvious one, coming from a trading background would be simply just a, yield. I mean, everyone, crypto funds, crypto traders, they are hungry for yield. And the way I see it is, compared with, the ICO during 2017, you have more institutions actually involved, playing on the DeFi field. Simply because, on the yield farming, rather than actually delta punting, interestingly. So, and obviously speaking of consequences, you do have, some of the common pain point around the DeFi space, namely the network congestions, the smart contract risk, security risk, etc.
Actually, there's one of the things which you mentioned, which is now one of the most probably the main trends. If we're talking specifically about DeFi, it's yield farming actually, because not only DeFi is additionally one of the hottest trends in crypto space, but also there are already hot, I would say, 4 trends which defined, for example, Ethereum DeFi in quarter 3 2020. This is according to report by Consensus, which is the yield farming, government tokens, the rise of automated market makers, forks, derivatives, and network effects, and so-called weird DeFi. So here I would like also to ask you, because Nathan actually mentioned about tokenized BTC, would you also like to, I would also like you to specify on so-called weird DeFi, because is it like the DeFi which we were aiming for, or is it like an additional bubble burst which is growing? In this case, I'm talking about, for example, so-called eatable DeFi projects, for example.
Yeah, so the way we think about DeFi is, I mean, I don't know the reference term weird DeFi, but I would say that DeFi for the most part has been this very interesting layering where we've started to see it accelerate in the last year. But DeFi has existed, I mean, since the beginning with Ethereum. When MakerDAO came out, you had DAI for the first time. There's been a whole layer of projects that have built different foundational pieces. The beauty of what's happening now with DeFi, though, is we've now got to such a level of composability that these projects are starting to interact with each other in ways that are completely haven't been anticipated. And so you start to see a flash loan coming out of Aave, and within 3 different hops, you have these trades that just never would have worked in the past and don't even exist in the TradFi market to begin with. So we're starting to see this really interesting synchronicity happening where all of these products together create unanticipated use cases that they didn't even really anticipate themselves. And so I'd say that's probably the most exciting piece of DeFi is the emergence that's going on there. And we're even seeing that now. There's still so many layers of new types of fundamental paradigms that are still being brought into DeFi itself, from futures to options, et cetera, that still don't fully exist in the market, but are being built out. And then all of the intersecting components there, which I think is where the true excitement is.
Jonathan.
Yeah, I mean, regarding the bubble that you actually mentioned before, I think the landscape actually looks a lot healthier compared to half a year ago. So the typical actual, FOMO sentiment has already passed, and the crypto funds and traders, they are a lot more cautious to select quality projects for them to invest and for them to trade. For me, I don't believe the DeFi, space would ultimately take over the entire traditional institution. But having said that, it certainly work quite well on particular, areas. For example, in the emerging economics, providing access to those kind of like acting like a bridge to the traditional finance world. But also, I think it will be very interesting to see, where a lot of the traditional, institutions start to collaborate with existing crypto community. The DeFi will actually benefit, the DeFi space will actually benefit from a very healthy and organic growth.
Actually, as you mentioned previously, by the way, when we were talking about DeFi, and there is like a not so strict demand for KYC procedure, can you tell, is this a plus or minus in this case?
I would say it's both. I mean, depends on how you view. I mean, obviously from a regulator perspective, DeFi is always tricky to regulate, because given it's actually no KYC whatsoever, right? Compared to another sort of traditional world where in the major component, the payments stuff on the exchange side, on the borrowing and lending, you always have a regulator, or you always like a third-party intermediaries to overlook the entire ecosystem. Whereas in DeFi is interesting in the sense that first, I mean, from a regulator perspective, it's definitely a minus for them. But I guess, I mean, it actually benefit from the organic growth where you would have, a lot of the people, especially from the emerging economies, can actually have access to those different products without, KYC. So, I mean, definitely, I mean, from a regulation perspective, it would be still some work to go on. But in general, just on the demand side, it was definitely a big plus in terms of the DeFi. And this is exactly one of the unique features, right? Being, DeFi and being, permissionless.
Very much so. Off the last point that he was mentioning, as far as bringing in all of these unbanked individuals into the banked sector, I think that's one of the most exciting components of DeFi, is that in not having this KYC, you end up realizing that the current financial system really does create a stratification of class. If you have a passport, from a specific country, certain level of wealth, credit score, et cetera, you get access to financial products. If you don't, say you're an illegal immigrant in the US, you have zero access to any sort of financial products. And so for the first time now with DeFi, we're seeing something that can truly go global in a way that anybody with a smartphone can access.
So definitely one of the main ideas, as you mentioned, one of, I would say, brilliant ideas behind DeFi was to create this ability for financial inclusion of more people to enter decentralized finances. How can you compare, by the way, Nathan, as also you mentioned, like the first DeFi projects, which were like also dreamt to create this new reality, a bright new reality as Compound, MakerDAO, of course. But also, can you share, like, from what have you been observing, Jonathan, you too? What was, for example, the idea of this, let's just say, dream DeFi, and what is the versus reality DeFi right now at the moment?
Yeah. I would say the interesting thing is I don't know that DeFi was ever truly a cohesive dream. And that's kind of the beauty of the ecosystem, that it was all of these small dreams that ended up colliding and intersecting. And it wasn't until there was enough of an ecosystem and momentum that people even started calling it DeFi, right? In the beginning, when you first had stable coins that were completely permissionless and weren't backed by a centralized agency, it wasn't yet DeFi, right? Even 0x, when that came about, it wasn't yet DeFi. And so I think what ended up happening, and the beauty of it, is that all of these fundamentally needed products in the space ended up bubbling up to the surface and realizing, wow, we're all going to interact together in a really important way. And now when the DeFi component came apart, about the ecosystem is the interactions that's going on there. And I think moving forward, like the dream of what that looks like is equally as interesting, in the sense you'll end up seeing a lot of things that no one's going to anticipate. And then there's a lot of things that people do anticipate, a lot of traditional financial products that will be pulled into this.
I would like to ask you, Nathan, because as you said, I've heard that you're good at predicting, anticipating something. What do you anticipate right now?
It's a good question. Yeah, so we've anticipated quite a few of like the thematic verticals. So starting with stable coins, DEXs, we were really early on. Right now, we think that futures are really exciting. So decentralized futures specifically, it's a huge market and pretty clear asset product. I think options are going to be very interesting. The biggest aspect, though, that I think is just starting to bubble up is the aggregation layer. And so the aggregation layer on DeFi are, these meta protocols that sit on top of all of the different yield farming protocols with similar types. So Urine, for example, Wi-Fi, the ability to direct stable coins towards the best yield seeking profit layer in an automated way, I think is really fascinating. And that's only going to accelerate. We're just starting to see the beginning of that, where everything that we see in kind of the ETF world and the traditional money manager realm is going to just go light speed, because in the DeFi world, right, you combine that with composability and also the ability to, put this logic inside of a real smart contract, and there's a lot of potential.
Okay, Jonathan, tell it your perspective, like where do you see the most potential in this case?
Yeah, I guess it just comes down to the main sort of three key areas for the traditional and centralized finance. So namely, obviously the payments, between either, versus institutions or P2P. So basically a DeFi would definitely have potentials to have a cheaper and potentially faster payment process, as well as lending, for example, a second big component, for the DeFi as well as the traditional space. So again, DeFi will facilitate the P2P lending, as well as providing such a low cost alternative compared to traditional finance side. So I guess the main and final one would be definitely on the exchange side. So traditional, exchange, we speak a lot about the decentralized exchange, where you don't have, third party, being the settlement clearing process. So everything would be naturally, going to that three areas.
Understood. What is your perspective, how it may influence the traditional financial market?
I mean, I guess obviously, not even DeFi, cryptocurrency, as Bitcoin sort of taking the spotlight lately, you have all the major, US listed companies start to buy in. So this is a good trend, for, I wouldn't say massively, like mass adoption overall, whereas it's just getting a lot more, spotlight from different sort of social medias, where a traditional world will actually look at, stay back and actually look at. So I guess the main thing for the traditional guys is, for them it's like, hey, we have an amazing product. We create this particular DeFi product, and this is something, for example, to challenge them the way they do business. Is this something that they can improve? Is this something they can actually think of to collaborate with the crypto community in order to, providing, just like exactly, I mean, PayPal is definitely a good example how they recently just enabled that payment feature. So I would also, anticipate to see a lot of different trends, not mainly, you have a very cash, healthy companies start to buy Bitcoin, but, actual strategic way to enable the blockchain solution.
I'm curious, for example, in this case, if PayPal in the future would not only allow to trade Bitcoin, but also other stable coins, like for example, DAI, how it would influence, in this case, MakerDAO project. And I mean, in this case, the general DeFi.
I mean, having PayPal to enable the huge amount of user space definitely increase the liquidity part. So anything just comes down to, particular supply and demand. So if you have actually a lot more demand, especially from the traditional guys, then this is, a very good trend or a healthy sentiment across the whole crypto, projects in general. So this will actually, incentivize, very smart people or crypto community in order to create another, amazing product that can actually rely on as well.
Understood. Nathan, what do you think about that?
Yeah, I agree with those sentiments. And I also think the biggest aspect there is just creating more payment rails to allow fiat onboarding into crypto. So if within your PayPal app, you can get access to Bitcoin, any sort of stable coin, whether it be DAI, USDC, et cetera, I think that just opens the floodgates for consumers and users to start to come into these projects and to the ecosystem a lot stronger. So I think that obviously that was a big component of 2017, was allowing capital to flow into the market. And the more seamless we make that transition, I think it also will end up resulting in heavier spikes up when there is market sentiment and fervor and people do want to pile in. And now it's also easy for them to do so.
It really sounds really interesting and really exciting. At the same time, I would like to touch one topic which might be, in this case, a bit painful and really challenging for DeFi, because almost every week, practically sometimes every 2-3 days, I'm reading the news of what's happening in DeFi about the new attack. Like the problems right now, which DeFi are facing the most, are actually the problems with cybersecurity, like the attacks with flash loans, for example. And not only, and this is like just the other day, Acropolis has lost how much million, I forgot already. So there is like one of the biggest, I would say, weakest probably spots in DeFi are cybersecurity. How can you comment on this? How it can influence generally the trust of people, or as we can see, it doesn't matter from their interest in the how much DeFi is locked in right now.
Yeah, I think it's there's two sides to this. I think first you have to separate out the types of attacks that are going on. So you have purely financial attacks where you use flash loans, you're using smart contracts in the way they're intended to. And then you have other attacks which are generally security vulnerabilities that the contracts themselves, the companies that put out these contracts, didn't catch or wasn't picked up in an audit. So on one side, there is going to be, on the first side of the security vulnerabilities, I think that's going to be an ongoing game of companies, businesses having to audit their intensely. And the more innovative and creative you get with those contracts, the more vulnerabilities you'll introduce. On the flip side of that, there's also a lot of potential there in the sense that we do see a lot of projects roll out really quickly by using base level contracts from other projects. So if you look at synthetics, for example, their base level contracts have been reused multiple times by other companies to quickly get a relatively complex project up and running without having to go back and retrust everything that was built below you. So I think that's a really positive thing. On the other side, the fact that there does need to be a huge amount of audit work, it definitely slows down innovation and progress. It's not the same as Web 2.0, where you can just throw up an application and for the most part not have to worry that user funds are at a huge risk. So I think to some degree, that's just going to be a continued game, and we'll see how that goes and progresses. On the other side, as far as the financial attacks, to be honest, I potentially have a contrarian view. I think it's actually a good thing for the space. I think in the general for the ecosystem, yeah, so I would say like flash loans, for example, they've introduced all of these potential vulnerabilities, but really all they've really done is accelerate those vulnerabilities. And they've made it more accessible for people with lesser amounts of capital, but maybe more insight into the actual technology and smart contracts and how specifically they work to take advantage of those. And two, I think in general, it's very similar to free markets. I think you in any sort of economic system do a much better job of creating a robust system by having a free market economy. And so it's the same in the crypto world, where if you do go by this rule that code is law, which is effectively the way it works, then you do also have to fully adopt the mindset that everything that's out there does need to be flash tested with these financial attack vectors in mind, and there are solutions to them. So it just forces all of these contracts, going back to point one, all of these projects and the smart contracts themselves to be that much higher quality and have thought about these things beforehand too.
Thank you, Jonathan.
Absolutely. I completely agree with Nathan. I mean, definitely it's an ongoing game. I mean, not only in DeFi as well as crypto space in general, or even in the traditional economy. But I guess, I mean, completely agree with Nathan in the sense that, every project, regardless of whether, you're a DeFi or crypto space, it's all about, improving on your security protocol, right? And, it actually, even if you are not a project owner, if you're an investor, either a crypto fund or trader, you need to do your homework. You need to make sure you understand the actual model. You just don't go blind and then invest in those. But in the long run, it will, I mean, the low quality project is going to get flushed out, and then what remains is actually the quality ones where you have, a very high security standards in them.
Apart from the above mentioned, what do you think are additional main challenges for DeFi in the future, which it will and may face?
I would say the biggest one right now is scalability. So that's, I mean, this is something we've come back to since 2017. To be honest, I think that was the peak of the 2017-18 bubble, was CryptoKitties and everybody realizing that this kind of silly game can bring down the Ethereum network and kind of grind it to a halt. And so it's the same thing on the DeFi side. Even, a couple months ago, we're looking at $200, $500 gas fees, transaction costs, and that doesn't really work for the consumer market. There's still a lot of, higher order transaction values that can still go through at that. But the truth is, if we truly want to take DeFi to the consumer market, we need to have a scalability solution, whether that's ETH 2.0, Optimism, rollups, et cetera. So we'll see how that plays out. There's a lot happening there.
In this case, I would like also, Nathan, you to proceed. What do you think about, like, in 2017 again, when this ICO boom craze was happening on Ethereum network? A lot of other projects wanted to attract, and they did attract a lot of and created as well ICOs on their blockchains, like for example EOS, Cardano. Now I can also see in the news that Cardano, it might be like the next again best platform for DeFi projects. The same with EOS. How do you think still? Are they competitive in this case or no?
Yeah, I don't know if anybody but the Cardano team thinks that, but I think at the end of the day, there is a lot of interesting alternatives to ETH out there. So DeFi definitely is ETH-centric at the moment, but everything from Solana, Polkadot's really fascinating. We're seeing some stuff out of Cosmos, and if not even on Cosmos directly, a lot of chains that are built off of Cosmos. So there's definitely a lot of interesting things happening within DeFi, and personally, I think it's a good thing for that to happen. I think the more we see a proliferation of DeFi projects across different chains, you end up getting kind of a Twin Cities effect, right? Where you're better off having multiple major metropolises trading with each other and specializing in what they do really well than having one that tries to do everything. And that's where you get an even more vibrant ecosystem.
Yeah, understood. Jonathan, please also comment on, first of all, on the competitors of Ethereum again, and also what the main challenges might be for that.
Yeah, I mean, I guess the main challenge is, always comes down to the scalability. You can see a huge amount of over concentration in one single network at the moment for DeFi. pretty much Ethereum base account for, 80% plus of the total lockup value, right? So, I mean, it's actually opened a lot of opportunities for other protocols, for example, EOS and, other, amazing protocols in that sense. But just coming back also on the KYC stuff. So, I mean, the fact that it's actually permissionless and then there's no KYC required, it actually makes the whole lending landscape very inefficient in a sense. So if you're running a lending platform, you need to have certain sort of like over collateralized sort of mechanism in place. Otherwise, even anyone can access the lending. If there's no KYC, then there's actually virtually no way to facilitate, unsecured loan. One potential way to counter that could be sort of credit score, protocol if someone is developing it. But in the meantime, I mean, the lending space is still relatively inefficient just due to the fact that there's no KYC in place.
Thank you. Actually, Nathan and Jonathan, again, taking into account that you've been doing analysis of it and taking into account that we are about to reach 2021, how can you tell, and this is not an investment advice, but in this case, what type of projects in DeFi definitely we should look into, and which not be about the hype, but really will be about the real use cases. So it's not only, okay, I don't want to, in this case, to compare that these are like only for, this money leg was only for game. These are like the traditional decentralized finances were intended to be. But in your opinion, what should we look into? And you may say without the names, if it's possible, but definitely what we should follow next year.
So as far as new projects to follow for next year, without mentioning the names, I would just go back to verticals. I mean, starting at the top all the way down, like lending is really interesting. Derivatives are extremely interesting. The entire DEX space is interesting. And with that off of the DEX space, we're going to start to see futures. We're going to start to see options soon enough. And then the big component of that, I'd say that branches out that we're still just starting to open into is the entire consumer market. So how do we get consumers into DeFi? What does that look like? And there's a whole list of components that go into that, whether it be smart contract wallets to easily allow them to interact with DeFi protocols, more automated tools that allow you to take advantage of what a DeFi protocol has to offer. So for example, automated staking services where it's a DeFi protocol that stakes for you, so you don't have to interact with it at a deep level or have a deep knowledge of it. So I'd say it's a pretty good overview. There's a lot to come though.
Jonathan.
Yeah, on my side, I'm definitely biased towards the derivative space, given I am, myself been derivative trader for quite some time. And the natural way for DeFi is going to, expand. It's going to be, very similar with the traditional exchange. When they started first with spot exchange and then futures, derivatives plus options. So I think there's still a lot more room to be done in the derivative side. Right now, the product is still relatively simple, just from option strategy standpoint, and then just from the complexity of the product. And it's just a whole new level of, how you can play it, where a lot of the different products can be sort of, referenced from the traditional market standpoint. For me, it will be definitely on the derivative on the DeFi space.
Understood. And lastly, example, or really like in this case, the price of Bitcoin again influence and it will again influence the price of different DeFi projects, as we can see now the bull run, or will it, like in this case, will not be correlated?
I think they're always going to be correlated. So even interestingly, the stat you mentioned today about $13.8 billion TVL locked up in DeFi, that's directly affected by the price of Bitcoin. What'd you say?
Sorry, I said that it will be almost very soon, I think 14 billion.
Yeah, absolutely. And a lot of that too right now is being driven by the increase of Bitcoin. So if you look at a lot of the money that's locked in Bitcoin, a lot of that is some synthetic derivative Bitcoin, WBTC, REN BTC, et cetera. So as the price of BTC goes up, DeFi's total market cap also goes up with it. But beyond that too, I just think there's a natural seesaw effect of more liquidity in the market, more Bitcoin holders with more money. That's going to flow into the rest of the space. And that's a very natural effect.
Is it
Absolutely.
like
Yeah,
John.
and I guess, I mean, my feeling is the correlation will improve even better if the actual institutions start to, come and play on the DeFi space. Right now, a lot of the, traditional guys still eyes on Bitcoin only. But when they actually, have a think and then study what DeFi actually like, then this will actually, become a different story.
Okay, thank you so much once again, Jonathan C. and Nathan Doctor today at Hong Kong Blockchain Week about the rise of DeFi from the hype to real use cases. I actually really found your points really valuable and definitely worth not only to follow, but also like dig deeper and find out deeper and more in detail. So thank you so much for your insights. Thank you so much for joining me. I am Maria Vovchok for Hong Kong Blockchain Week. Please enjoy the rest of the week and have a nice day. Thank you.
Thank you, Maria. Thank you, Nathan.
Likewise. Thanks, Maria. Thanks.